Hi, this is Joanne Musa, the tax lien lady, and today I'm going to talk to you about tax deed investing on steroids. Now, I know that many of you have heard that tax deed investing is a great way to get real estate for pennies on the dollar. And in my last video, I told you about some of the problems with tax deeds. But now is a great time to start investing in tax deed properties because there is more available and less competition than in past years. However, you still have those problems that I talked about in the last video. In some states where even the minimum bid is quite high and then the property gets bid up, sometimes close to market value. Now, competition is not quite as bad as it was in the past few years because the real estate market has gone down quite a bit in these states. However, you still need to have a lot of money at the sale, and these properties still get bid up quite high enough that it precludes most investors, the average person anyway, from buying some of these tax deeds. So what I want to talk to you about today is a secret that can explode your tax deed profits. And this is a little known secret about tax deeds that you can do in some states. Not all tax deed states will let you do this, but some states will. And this is a way that you can cash in on your tax deed properties without even going to the tax sale. So how would you like to be able to buy tax sale properties for less than they would sell at the tax sale, get clear title to the property in states that don't issue you a warranty deed, and how would you like to not have to go to the tax sale or not have to bid at the tax sale in order to make use of this secret that I'm going to tell you about? Well, what I'm going to tell you about is a way that you can cash in on tax deed properties with a strategy known as excess proceeds. All right, so what is excess proceeds? Okay, well, excess proceeds is the amount of money that is in excess of the back taxes and penalties or the minimum bid. So the difference between what the property is actually sold for at the tax sale and the minimum bid are the excess proceeds. Now, some states will give this back to the owner of record of the property at the time of the sale. And this is something that you can use to your advantage. Now, here's an example of excess proceeds. This was a tax sale. I'm not sure what county or state this is. The gentleman who I got this from is in Ohio, and I know he invests in tax deeds both in Ohio and in California and other states. So my guess is, this could be either California or Ohio. But just to show you what happens to these properties, the minimum bid on this particular property was $19,300, and it was sold at the sale for $57,200. So the excess proceeds, or the difference between the minimum bid and what it was sold for, was $37,900. Okay, now, so here's how this system works. Of course, the first thing that you want to do is have a list of properties that are in the tax sale, and you want to get this list well before the sale. The sooner the better. And the first thing that you're going to do is contact the owner of a tax sale property that you're interested in purchasing. And my initial contact, I would contact, quite a few owners. I would pick a few properties off of that list and contact quite a few owners. Now, my initial contact would be by letter, and I would leave my contact information in that letter. I would put my name and phone number so that they could call me, because I do want to talk to them on the phone if they're interested in selling their property to me. I want to develop a rapport with them, and I want to see if they'd be willing to give me a quit-claim deed for their property for very little consideration. So my next step after my initial contact with the owner of the property is to make a very low offer on their property in exchange for a quitclaim deed to the property. Okay, now, once I get the deed to the property, I need to record it right away with the county clerk, and this needs to be done a few weeks before the sale because I want to be the owner of record at the time of the sale and actually a couple of weeks before the sale. Okay, so now if you've gone through these steps, you've just purchased a tax sale property for pennies on the dollar, and you could pay the taxes that are owed and own the property, and you would have picked it up for less than you would have if you had bid on it at the tax sale. Or if you want to follow this excess proceeds strategy, you could not pay the taxes and let the property go to tax sale and then apply for the excess proceeds. Okay, what's great about using this strategy is that you avoid the competition at the tax sale. You pay less for the property, way less. I mean, if you're going to use the excess proceeds strategy, you might have only paid a couple of $100s for the property to the owner in exchange for the deed on the property. But if you actually want to keep the property, you will have to pay that plus the back taxes. You've still paid less for the property than you would have if you bid on it in the sale. You get clean title to the property because you purchased it right from the owner and they gave you a deed to the property. There's clean title to the property. There's not a cloud on the title, as there is when you purchase it at a tax sale in states that don't issue a warranty deed. Now, you also have minimal expenses, especially if you're following the excess proceeds strategy. You may be able to pick up a property for only a couple of $100s and then just turn around and collect the excess proceeds. Your expenses are very minimal. Okay, now what to watch out for. There are things that you need to watch out for. This does not work in all deed states. So the first thing that you have to do is call the county office, the tax treasurer's office or the tax collector's office, and find out what happens to the excess proceeds after the tax sale. Can the owner of the property apply for it? Is it given back to the owner? And if it is, do they need to apply for it? Or is it, in the case of Pennsylvania, in my state, they automatically give it to the owner of the property at the time of the sale? Another thing you need to ask is who has first right to that money. Does the owner of the property have the first right to that, to the excess proceeds, or do any lien holders have first right to that money? You need to record the deed in advance of the tax sale. This is really important because you need to be the owner of record of that property at the time of the sale. And you want to make sure that there is enough competition at the tax sale that the property will be bid considerably higher than the back taxes. Now, because you're buying from the owner, you can be responsible for any liens or judgments on the property. So that's another thing you need to do, is look for liens and judgments on the property before you buy it from the owner. But of course you would do that anyway when you're purchasing a property in a tax sale. Okay, now to find out more about the excess proceeds strategy of cashing in on tax deed properties without going to the tax sale, you can go to www.taxforeclosurefortunes.com, and you can put your name and email on that page, and what you'll get is a free mini course from me that has the first 20 minutes of a seminar that I did, an interview that I did with an expert on this process, and he's going to explain how it works. And you'll also get the first few pages of a manual that I wrote. Now, this is not the full course, but you can get it for free. It's a mini course, and all you have to do is go to that page, www.taxforeclosurefortunes.com, and put in your name and your email address. And I will see you in the next video